MTF relatively is easier. You have to only compare the interest that you pay and the return that you make. So in MTF, you are able to buy a larger value against the money that you may not have. MTF actually allows you to buy 2 lakh rupees of stock or say 3 lakh rupees of stock with this 1 lakh rupees of fund that you have.
मार्केट में MTF यानी मार्जिन ट्रेडिंग फैसिलिटी काफ़ी ब्रोकर्स ऑफर करते हैं, लेकिन आपके लिए सबसे बेस्ट ऑप्शन क्या है और ये कैसे समझे कि कौन सा फीचर आपकी ट्रेडिंग जर्नी को रीडिफाइन कर सकता है। हेलो एवरीवन, वेलकम टू आवर स्पेशल एडिशन पॉडकास्ट बाय कोटक सिक्योरिटीज। आज हम बात करेंगे एक ऐसी फैसिलिटी के बारे में जो आपकी ट्रेडिंग जर्नी को रीडिफाइन कर सकता है। पे लेटर या MTF या मार्जिन ट्रेडिंग फैसिलिटी जो आपको मिलता है कोटक नियो के साथ। और इस इंटरेस्टिंग टॉपिक को सिंप्लीफाई करने के लिए आज हमारे साथ है आशीष नंदा। हाय आशीष, वेलकम टू द पॉडकास्ट।
Thanks Maulik, thanks for having me here. Thank you.
Ashish, what is this sudden buzz around MTF or margin trading facility?
Yes, Maulik. See, MTF facility has been there for quite some time. The regulations came somewhere in 2016, 2017. So this product has been there for 7-8 years. The recent buzz around MTF, in my opinion, is because a lot of brokers who were earlier not offering MTF have now started offering MTF. Kotak has been doing MTF for all this while. However, there are certain discount brokers who have recently started offering this facility. Again, more brokers offering it, more information to customer, and that's why the lot of noise around MTF.
And how has MTF volumes in past few years, panned out across market? Is it suddenly there is some spurt in MTF that we are looking at?
So Maulik, this product has been there, as I said, for 7 years, but yeah, lately we have seen more volumes growing. Having said that, the current volumes, the MTF funding facility is about 80 to 82,000 crores. While the number may look 82,000, but I think considering it with the market cap of India, it's a very small number. So I think this product is just started picking up. It will go from here. I think there will be reasonable growth in product over a period of time. But yeah, the volumes are small as compared to volumes in F&O. So I'm saying, if that matter, the volumes are still small.
Got it, Ashish. So now that you brought F&O into the conversation, is MTF as risky as F&O, or what is the riskiness of MTF as a product?
So Maulik, I'll give you a slightly different reply. So I'll compare this with two different products. Okay. One is a normal buying when you pay 100% and you buy a stock, and second is an F&O. So I'm thinking three products: MTF, normal buying, buying and selling normally with full money, and F&O. I believe MTF risk is somewhere more than you buying stocks directly in the market and less than F&O. I say that because in F&O there are many variables. There are a lot of Greeks: alpha, beta, gamma, theta. So you have to look at lot of variables before investing. There's time value of money, intrinsic value. So it's not a very easy science. And when clients buy in F&O, I think since they do not have knowledge of all these Greeks, they at the end of the day end up losing money. MTF relatively is easier. You have to only compare the interest that you pay and the return that you make. So if you have a high conviction idea where you know I am paying X as cost and I will make Y as the income, it is easy for you to relate. So it's an easier product as compared to F&O, but yeah, it has higher risk. If you are buying directly in the market, paying your entire money as against leveraging under MTF, so it has slightly higher risk than directly buying into the markets. That's the way I would want to put it.
Fair enough. And we keep getting so many requests, questions about MTF, especially from a lot of first-time investors. Yes. So if you can help us simplify, what is MTF, what are the different jargons that are used in and around MTF as a product, and with an example, if you can help us, understand how and when should an investor use MTF as a product.
Sure, Maulik. So MTF, I think, is known by a lot of names, Maulik. We call it MTF, somebody calls it margin funding facility, somebody calls it margin trading. Recently, a lot of online platforms call it pay later. There are some who call it buy now and pay later. So there are various names, but they all are in fact, margin funding facility, MTF. How does MTF work? So I'll give you two examples, one a little short term, one a little long term, so that you can comprehend how MTF actually works. Say you have got 1 lakh rupees. With 1 lakh rupees, there is an order type called CNC, where you put CNC actually means cash and carry. So you have 1 lakh rupees, you want to invest 1 lakh rupees into a stock. You pay 1 lakh rupees, you buy a stock, and the 1 lakh rupees worth stock comes to you. Just taking an example, you had very high conviction on this stock. You had gone through all the numbers of this stock, and finally you thought that I will buy it. Technically sound, I want to buy it. I expect a 10% return on this stock, say for a period of 1 month. You buy this stock and the stock actually goes up 10% the way you expected. Your 1 lakh rupees becomes 1 lakh 10,000 rupees. Yes. You make a 10,000 rupees profit. So that's straight buying and selling, straight profit. Now what happens in MTF? In MTF, you are able to buy a larger value against the money that you may not have. So you have very high conviction on this idea and you wish यार काश मेरे पास 2 लाख रुपया होता या मेरे पास 3 लाख रुपया होता तो मैं ज़्यादा ले पाता. MTF actually allows you to buy 2 lakh rupees of stock or say 3 lakh rupees of stock with this 1 lakh rupees of fund that you have.
And who pays the remaining 2 lakhs?
The 2 lakh rupees is paid by the broker. So at the end of the day, you will have to pay the full money to the exchange to buy a stock. So you give what we call margin. The margin is the 1 lakh rupee that the customer gives, and the 2 lakh rupees is MTF or the funding which the broker gives. So with this 1 lakh plus 2 lakhs, you go in the market and buy 3 lakh rupees of the stock where you had a very high conviction. Now just taking an example, this stock goes up by the same 10% that we have taken in an example before. So what happens? 3 lakh goes up to 3 lakh 30,000. What do you make? You now make 30,000 rupees. And of course, there is a cost for the 2 lakh rupees that the broker has funded you. This cost generally, we are taking an example, let's take a rate of interest of say 12%. For easy understanding, 1% a month. So you will pay 1% on this 2 lakh which you have borrowed from the broker. The cost 1% on 2 lakh comes to 2,000 rupees.
Yes.
So net what you make 30,000 rupees of profits minus 2,000 rupees of cost. I'm just keeping brokerages and STT and other costs separately so that we make an easy example for our customers. So we make 28,000 rupees, 30,000 rupees of profit minus 2,000 rupees of interest cost. So customer ultimately makes 28,000 rupees. So one side, when you invested your own money, you made 10,000 rupees. This side you made 28,000 rupees. But this is on the return part. I very well explained that this is a high return product.
Yes.
But high return comes with high risk as well. Just comprehend, had this 10% not come and rather the market would have fallen and this stock would have given you a negative return of 10%. What would have happened in the first case is 1 lakh would have returned 90,000 rupees.
Yes.
So straight 10,000 रुपए का loss. In the second example, जहाँ हमने 3 लाख रुपए market में डाला, 1 lakh rupees of margin and 2 lakh rupees of funding. Say the market falls 10%, the 3 lakhs will become 2 lakh 70,000 if there is a 10%.
30,000 rupees loss.
So that means a 30,000 rupees loss. The 2 lakh rupees funding interest, तो अभी भी वो cycle चल रही है. So you have to give another 2,000 rupees to the broker as interest. So as against a 10,000 rupees loss, you will now make a 32,000 rupees loss. So I think what you have to understand is, while it gives you high return, there is an opportunity, I will not say opportunity, there is a risk of making a 32,000 rupees loss as well. So it is a high risk and high return kind of an opportunity. Having said that, I would want to explain this risk a little better as well, Maulik. There are 5-6 things that a customer has to understand before jumping into MTF. The first thing is that the idea on which you want to take MTF funding has to be a very high conviction idea.
Absolutely.
अगर तुम्हें लगता है चलो ले लेते हैं, मेरे को टिप मिली है, मेरे किसी फ्रेंड ने बताया है, अच्छा स्टॉक है, I think unless you have very high conviction on this idea, you should not take margin funding. You should be very strong believer in this stock when you go into margin funding. Otherwise क्या होगा, if the stock goes down, you will have to pay interest costs, the losses will mount. You have to take this stock only on high conviction ideas. The second thing is you have to also ensure that the rate of interest that you are paying to the broker on borrowing has to be less than the expectation of the return that you are expecting. So अगर तुम्हारी expectation है 10%, but आप borrowing कर रहे हो 12% में या 15% में, you will ultimately end up losing. So the return that you expect has to be much higher than the interest cost that you are paying to the broker. These two are paramount, most important things that you have to be very clear about. The two other small things is that whenever you buy a MTF stock, you will have to pledge it. So next day broker sends you a message which comes through NSDL that pledge this stock. Because you have not paid in full, broker will want it to be pledged. You have to pledge this stock the next day. A message will come. So you don't have to forget to pledge it. Otherwise, it will become a fully paid stock and the broker will come back to you asking for the balance 2 lakhs as well.
So broker converts this position of MTF
That
into
is right.
CNC.
That is
and
right.
hence the requirement of paying the entire full amount.
That is right, Maulik. So what happens is if you have not pledged, the MTF positions become a normal CNC position and broker will say, now you bought something for 3 lakhs, you've already paid 1 lakh, give me the balance 2 lakhs. So it becomes a normal position. So I think you have to be very clear that you have to pledge these stocks the next day. You have to remember to pledge these stocks. Apart from pledging, you have to also, one thing more that you have to be very clear about is that markets can be a little volatile. At times, margins can drop. Say the market drops by about 2, 3, 5%. Your margin of 1 lakh can dip to 95 or 90. You have to, as per law, you have to always maintain the 33% margin. So you have to make sure that some buffer is maintained in your account with the broker, some extra 5, 10, 15,000 rupees, so that if in the interim market corrects a little bit, you have excess margin available to you, and you have to also monitor the margin. At any point of time, if the stocks dip, you have to make sure that you up the maintenance margin into the account. So margin monitoring is the other thing that you have to be very careful about. So 4 things. One is high conviction stock. Second is interest rate should be lower than the expectation of return that you have from the stock. Number 3 is pledge. You have to pledge the stock. And number 4 is maintain the margin, a little buffer margin in your account.
Got it. Along with that, Ashish, now that you've touched upon margin, can we dive a little further, because there are various types of margin, cash, non-cash or collateral, and what kind of margins can be used by users at Neo, Kotak Neo, to take these MTF positions?
So, Maulik, cash margin and collateral margin, I'll give you some sense. While if you buy an FNO position, there is requirement of 50% cash collateral, non-cash collateral. Here it is not that, here you don't need a 50% cash collateral. But just to explain, in MTF, you can give margins in 2 forms. One is it can be cash. You can give any point of time, you can give cash as margin. The second thing is you can also give stock as margin. Stock, of course, after appropriate haircuts. So you can give cash, you can give stock. One thing peculiar about MTF is that in MTF, you cannot give mutual funds as margin. So mutual funds, which is allowed as margin, say in buying a normal cash or in buying FNO positions, here mutual funds don't work. So there are 2 sets of margins, cash and non-cash. A client can, for example, in the example which I just gave you, 1 lakh versus 2 lakhs of stock bought. 1 lakh margin can be in the form of cash. The 1 lakh margin can also be in the form of stocks with appropriate haircuts. So the margin can be in both forms, and you can have a mixture of 2 as well. You can give 50% margin in cash, 50% margin in stocks. But yeah, you can have any combination. But the margin of 100%, which is 1 lakh worth of margin, you will have to give in this example to take a position worth 3 lakhs. Having said that, not all stocks are available at 33% margin. When we say 100%, what it actually means is you can give 100% of one stock to buy 100 rupees of the stock where you have high conviction. So that is why we call it 100% margin. So cash and non-cash both are allowed.
So wherever user basically uses MTF for 1x margin, user uses this feature because maybe user does not have cash and uses stock as collateral and then takes the position in MTF.
That is right. At times you may not have a cash. I gave you an example where you had 1 lakh of cash. At times you may not have cash. You may have one stock in your portfolio, which also you can use as margin for buying 3 lakh rupees of any other stocks. So I think margin can be in both cash form and in non-cash form as well.
And how long can user continue this MTF positions? If is there any restrictions basis, leverage, or the multiple that we offer, or the
Sure.
type of collateral that we are offering?
Sure. 2-3 things. At Kotak, Maulik, we allow funding in about 1184 stocks to be in specific. So it's a wide range of stocks that you can take funding on. And this funding can be taken for any period of time. So long as you maintain margin, you can keep this funding. It can be 1 month, 3 months, 6 months. It can be more than 12 months as well. The only thing that you have to make sure is that margins have to be maintained at all points of time. Otherwise, the broker has the prerogative of squaring of the position, because law requires customer to maintain margins at all points of time.
Got it. And Ashish, how can user, if say I want to either pay partially for this MTF position that I might have taken, and extending the same example of 1 lakh
Sure.
of my own margin and 2 lakhs of funding. Say I have got some cash flow and I want to prepay or partially pay that 2 lakh rupees. How can I do it?
So, Maulik, this is a real life situation. It so happens when you want to take a position, you don't have funds.
Yeah.
But you know that some funds are going to come to you 1 month, 2 months, 3 months down the line. So at any point of time, if you get excess funds, either by selling a stock or you have excess funds which you want to give it to the broker, you can transfer that to the account. And there is a facility in the website and in the mobile app where you can convert an MTF position into CNC. So it is called MTF to CNC. So suppose you've got 1 lakh rupees lying in your normal account. Either you've got that by selling shares or you've transferred it to the account. You can appropriate this 1 lakh towards the margin funding position and release your 1 lakh rupees of stock. So this is a feature which is called an MTF feature. But yeah, this works very smoothly and you can free your stock. Once you free your stock, broker will release the pledge of that 1 lakh worth of stock, and they will be free stock for use to again use as margin if you want to buy anything else. So that's how it works. But yeah, there is also an interest incidence to this, which the client has to be careful about.
Sorry, can you please dive deeper
So
into
I just
that
wanted
as well?
so I think interest. So as I said, on 2 lakh rupees, the example initially which I gave had 2 lakh rupees of interest. What the client has to understand is that 2 lakh rupees funding that you've taken from the broker will charge you interest on the entire amount. So I think let me give you an example all over again. This time, let's not take cash margin. Let us take stock margin.
Okay.
You gave 1 lakh rupees of stock as margin and you bought 3 lakh rupees of the stock that you wanted to buy. So broker in this case will pay 3 lakh out of his pocket and he will charge you interest on 3 lakh rupees. You're given 1 lakh as margin, which is in the form of stock, but broker has funded the entire 3 lakh rupees position and given that 3 lakh rupees as margin. The interest will be charged on the entire 3 lakhs. Say for the example, we took 12% rate of interest. In 1 month, this interest will be 1% on 3 lakh rupees, which will be 3,000 rupees. If you at any point of time have excess fund, why to pay this interest?
Yes.
If you have 1 lakh rupees, 2 lakh rupees or 3 lakh rupees free cash available with you, I believe you should transfer this money to appropriate towards the MTF ledger and reduce your debit so that the broker stops charging you. If you do not appropriate, you keep free funds in your normal ledger or in your bank account, the broker will keep charging you interest on the 3 lakh rupees. So whenever you have excess funds which you think you will not be using it for a period of time, you should definitely appropriate towards the MTF ledger and bring your liability on interest down. So this is how interest is calculated. At Kotak, we have a product called Trade Free Pro. It is a product that we have launched specifically for an MTF user, margin funding facility user, where we charge a very lower rate of interest at 9.75. You can take any amounts of position. There is no restriction to the value. The only thing is the interest will be charged on a monthly basis. A lot of brokers also charge interest on a daily basis. We charge it on a monthly basis. We debit the ledger every first week of the next month, which also saves some pennies. So whatever it is worth, but yeah, it's a product which is built for the customer looking at the interest of the customer, we have built this product.
Absolutely. Ashish, completely unrelated to MTF, what are your views on the recent FNO regulations that have come in?
Maulik, I follow these regulations closely. Um, the regulator has been kind of unhappy with retail customers losing a lot of money. They have done two studies in the last 1.5 years. The first study said 9 out of 10 people losing money. The second study said 93 out of 100 losing money. It was even more. So no regulator will be happy looking at these statistics. And the regulator has the responsibility towards the retail clients. FNO also is not an easy science. As I just explained, it has got Greeks. You have to know a lot before investing. But there are a lot of people who invest not having the entire knowledge of FNO. So regulator in early October came up with some 6 measures. They added one more measure lately. Now there are 7 measures. 2 measures have already gone live. One is ELM margin of about 2%. The second is weekly expiries being reduced from 5 to 2. So I think volumes have already reduced. While premium volumes have not reduced that much, I think they've reduced by only 10%. But the number of contracts, the number of lots have come down significantly. If I remember correctly, it is about 40% drop in the month of December. There are 5 more steps which will go live, some in January, some in February, and one measure in April. I believe there will be certain little more impact of those regulations as well. I think finally when everything settles, premium volume would have dropped by 10 to 15%. However, the number of contracts or the notional volume, as we also call, would have, I think, shrunk by almost 50%. So I think regulators want retail investors not to kind of do a lot of FNO and kind of concentrate more on stocks which are easy to understand. And I think it's a step in the right direction. That's what I would say. And that's why I like, somewhere I say that MTF is an easier product for a retail investor as compared to FNO. Simple है, समझता है interest कितना देना है, मेरे को return कितना मिलेगा, तो it easier to comprehend, easier to understand. I think it's a better product than FNO at any point of time.
And last question, Ashish, how different is MTF from loan against securities or LAS?
Yeah. So sorry, Maulik, I should have mentioned this as well. A lot of people kind of confuse MTF with loan against shares.
Yes.
This is not a loan against share. If you have a share, you can't come to a broker and say कि इसके against मुझे loan दे दो. Brokers are not allowed to give any loan. Brokers can only fund any purchase that you want to do in the market. Brokers cannot give you a loan against shares. For loan against shares, you have to again go to banks and NBFCs, as the case may be. Brokers will not be able to give you a loan. They will fund your any buying position. That's how it is slightly different. MTF is a loan given by a broker only to fund your purchases. You cannot take a loan from him and use it for any other purpose that you want. For that, you'll have to go to the banks.
Sorry, last question now, genuinely last question.
Sure.
Lot of users come back saying, can the users get margin against pledges of this MTF positions? So
yes.
In general, if user holds the stocks in their Demat account, which are completely paid, they do get margin against the pledge. But does the same apply to MTF pledging as well?
So what happens is, Maulik, I've got this question many times in my Twitter handle as well. Customers come, can I buy in MTF and then pledge those shares to take positions in FNO? So what I would just want to tell you is that when you give a cash collateral or a non-cash collateral, it is a fully owned stock of the buyer. In MTF, you have not paid for that stock in full.
Yes.
So technically, that's not your fully owned stock. And since it is not a fully owned stock, you cannot pledge that stock to again get margin for FNO. So first of all, you have to pay that stock in full. free your stock of MTF and then pledge it to use it as a margin for buying a cash position or a MTF position or an FNO position. MTF stock cannot be used as margin for taking any other position. So relevant. I think I get this question quite a lot, and thank you for asking.
Any last words for our first time or investors who are starting their investing journey at Kotak Neo?
Maulik, I would say then MTF is not the product for you to start with. MTF for a new buyer comes quite later. Initially, any new investor has to first start with simple, straightforward buying, probably buy into large caps. You should go and read. We provide a lot of research on our website. You should go read through research and choose the high conviction idea. MTF is a product which comes much later when you have a real high conviction idea and you want to say, I would want to leverage it because I am quite sure that I can make a higher return out of it. MTF is not for first-time buyers. First-time buyers, in my opinion, should first go into mutual funds, buy really large cap or quality mid caps. And I think as they learn on how to invest, they can then dabble into probably small caps and probably into MTF. FNO, in my opinion, comes even later. So I'm saying that's how I would put it. But I think simple, straightforward, stupid investing, boring investing of just buying a very high quality stock is how small retail investors should start his journey with.
Thank you so much, Ashish, for your time.
Thank you, Maulik. Real pleasure, and hoping to have many such events going forward.
And I'm so sure this conversation of ours should help clear a lot of doubts of users who are using MTF as a product. And I'm hoping we've been able to answer all your queries and help you explain MTF as a product. Please don't forget to subscribe to our YouTube channel for regular updates. Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.